very happy new year to you all and a prosperous 2023 ahead. But there is one thing that you do need to deal with if you're here in the UK, and that's your self-assessment tax return, which is due on the 31st of January 2023. But the big question I always get asked is, well, what happens if I miss that deadline and submit my return late? Well, stay with me and I'll explain. So on screen now, you will see a table which outlines late filing and late payment. So there is a difference between the two. You can actually submit your self-assessment return at a certain date, and if there is a liability due, then you can end up paying it at a different date as well. So there is a penalty regime for both. But let's concentrate on late filing. First and foremost, if you miss the 31st of Jan 23 deadline, then there's a standard fixed penalty of £100, which lasts for up to 3 months. So that will take you up to the 30th of April. Now, from the 30th of April, if you still haven't filed, then on a daily basis, you could be charged a £10 per day penalty, up to a maximum of £900, which will last for a 3-month period up until you get to the point where you are potentially then 6 months late. And if you're 6 months plus late, then it starts to become a percentage, 5% or £300, whichever greater, of the total tax liability outstanding, and so on. The table is quite self-explanatory for you to view. So late filing and late payment are just two of the ways where you could probably incur a fine from HMRC. But actually, according to the website I've got up on screen here, which is contractorweekly.com, a reasonably trusted website from my point of view, the majority of fines are actually levied on people who have made errors and mistakes on their tax returns. So think about that one very carefully. And in a recent poll I did here on YouTube, you can see this on screen, 38% of you suggested that you were actually going to DIY, do it yourself, your own tax return. And that's quite common. I mean, obviously the self-assessment system is set up for that, but it's here where the instances of unintended errors and mistakes actually happen the most. So on screen here, you can see a survey was done by a company called RSM, and it was for the I believe they should have had 20 to 21 tax year. They've actually inadvertently put 21, 22. Over 100,000 workers were issued with fines by HMRC, according to the Freedom of Information requests lodged by RSM. And then if we break down the numbers, they go on to say there are different types of penalties issued by the tax office, including for late submission of payment or for errors on returns. This is the key point I make. Paperwork of payment. Where errors are made, there are 3 levels of severity: a lack of reasonable care, deliberate and concealed. And according to RSM, most of the penalties were issued for a failure to take reasonable care. So it's a less severe one, but actually it's just unintended errors. Yeah, it's people that, you may be doing your tax return and you're just not quite sure what to fill in what boxes, and it's completely understandable. These are the level of fines that were issued as a result. So reasonable care, my apologies, and compliance is absolutely crucial if you want to stop yourself from getting checked and actually fined. Now, they go on to say the ultimate responsibility lies with the individual, that's you, to ensure that the information provided to HMRC on your tax return is accurate. The tax office expects that reasonable care is taken all times with a self-assessment, including appropriate evidence and record keeping. Now, this is the issue when you are DIYing it against perhaps using an accountant. The chances are, if you are using an accountant and they are good, then the risks and chances of inadvertent errors or unreasonable care is severely minimized. I'm not suggesting in every case that it's completely reduced. Some could creep in, it does happen, but it's severely minimized if they are worth their salt in that respect. So just so you're very clear, the actual penalty and fines regime is different for careless errors or errors on your tax return as opposed to late filing and late payment, which I've already covered. So on screen again, I've put a table. What is the penalty regime for unreasonable care or errors that have been identified in your tax return? And here it is. And again, if you recall, it's down to the level of severity. Now, if you make a genuine mistake or error, then actually the maximum is 0%. If it is actually established it was an absolute genuine mistake. Then it goes on to a careless error if the inaccuracy is due to failure to take reasonable care, a maximum of 30% of the tax due. And then if it's unprompted or whether it's prompted. Now, unprompted just means if you spotted the error and you've actually gone forward and you've notified HMRC in advance of them finding it, then actually they're going to say, well, thank you very much. We're not going to actually obviously levy any kind of penalty if it is just a careless error. And if they prompt it, then the minimum fine, and don't forget these are minimums, okay, it could be more than that, there's a scale, is then 15% of the tax liability. Then it goes on to state the deliberate error but not concealed. The inaccuracy is deliberate, so you've deliberately made that error, you knew what you were doing, but you haven't concealed it. Then you can see the maximum, the unprompted minimum, and the prompted minimum. And finally, the deliberate error and conceal. This is where it's very, very severe, because you've actually deliberately concealed it, you've made the deliberate error, and there's a maximum of 100% of the tax due, and obviously you can see the minimum amounts as well. So the key message from me to you in this video is, look, just get your self-assessment tax return done by the 31st of Jan 2023. You've got till midnight to make the submission and also make the payment if one is due. Now, it's statistically also proven that the later your self-assessment, the more chances there are of it being randomly checked or audited. And then obviously the more chances there are of any unintended errors being picked up. So get it done on time. That's the first message. And obviously avoid all those unnecessary penalties, which can really stack up. I've seen people like getting charged 12, 15, 100, £2,000 plus unnecessarily, sometimes bigger than the actual tax bill itself. So that's the first thing. The second thing is the unintended or careless errors. Now, this is quite common, and I've shown you already the stats. Unfortunately, amongst DIYers of you, you know, it's going to be more of a risk. And look, it's understandable. Sometimes it can be quite confusing. So here's my suggestion to you. Watch this particular video here, which is my step-by-step tutorial for the 21-22 tax return. It's under 50 minutes, around about 45 minutes. So hopefully that can help you. And if it doesn't work, then in the same video, I recommend a accountant service called Tax Scouts, which is an online portal. And yes, I am affiliated with them, so I'm going to be very, very clear with you on that one. But I've also road tested them myself, and I can actually recommend them. £149, it doesn't matter what complexity your self-assessment tax return will be. It's a fixed fee, and you get a further 10% discount with my affiliate link in the description box below. So there's two alternatives, and certainly by using an accountant, you'll get things moving, you get that assurance, and also you'll get an accountant holding your hand and submitting it for you. And the instances and chances of then having any unintended errors or mistakes is drastically, and I do mean drastically, reduced. So best of luck.